So welcome, 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 everyone. I'm so excited that you are here and that Dr. Bev has joined us. That's really very exciting also. And I'm pulling up I'm doing so well today. I can't tell you what happened to, here we go. So Dr. Bev, we're so excited to have her. She's just this really amazing woman. She used to run an incubator for women's entrepreneurs, and she writes many of the dummy books, which I think is very fun. And her third edition on capital raising will be out, I believe she told me, in October. Is that right, Dr. Bev? And she now instructs grant writers on how to market themselves. So let's learn about the advantages. What she's going to talk about today is having a foundation inside your company.
Okay.
Dr.
Are you ready for me to screen share?
Please.
Can you see the screen?
Yes.
Okay, thank you. So welcome to Real Estate Nonprofits 101. People know me as the Grant Doctor. I have worked in real estate before, but on the office side, helping out with a small real estate company that was developing and had a pretty good fair share of business and investments. So this took me back down memory lane to when I was in my 20s. Okay, here's our agenda. Why go nonprofit? Examples of real estate nonprofits that are successful around the country and a little bit about what they do, the IRS requirements, and then getting started. So I want to give this disclaimer. I'm not an accountant nor a representative of the IRS. I'm just giving you some researched information that I found to create this presentation today and to give you facts and accurate information so that you're not misled by anything that you see on the slides or anything that I say. So why go nonprofit? Why would anybody go nonprofit? There's this misconception out there that if you create a nonprofit organization or join it, that the government won't let you make a profit. That is not true. Also, there's the belief that if you have your own nonprofit, you're likely not going to be able to get compensated for any work that you do under the umbrella of the nonprofit. That also is not true. There are multiple kinds of nonprofits, and we'll look at those nonprofits a little bit. But I wanted to share with you that in addition to having my limited liability corporation, LLC, which files a tax return as an S Corp, and that is my primary full-time business, I also formed a 501c3 private operating foundation. And I'll tell you a little bit about that now. It is a training foundation, the Grant Writing Training Foundation. It was founded in 2008. It wasn't because I had any noble feelings that I wanted to have a foundation that would take clients on who couldn't pay the regular rate, because that's not a business mind. In business, we want to make a profit, not take a loss or take low-hanging fruit. So with that, I formed that foundation as a way to reduce my corporation and my personal tax returns amount owed every year to the United States government. I needed a way to move my profits from my LLC into a legal umbrella that would not be taxable, whereas those transfers would be documented on written up letterhead from my LLC, indicating that as the CEO and president of the board of directors for the LLC, we hereby enter a resolution and adopt it to donate or contribute X amount of dollars, typically anywhere from $20,000 to $40,000 a year, out of the LLC into the private operating foundation. That reduces the taxes that end up on my 1040, because with an LLC, the bottom line for profit does carry over onto your personal income tax return. It also creates a way to provide other services and to do things in the community and fulfill your role as a nonprofit. So when former President Trump was in office, he changed the tax laws for private operating foundations. And he insisted that they have to contribute 5% of their annual revenue to eligible 501c3 charitable organizations in order to take the burden off the government, because so many charities constantly ask for federal grants, okay? And they're eligible as faith-based organization applicants. So that means keeping track of what you have in the foundation, knowing your bottom line, having an accountant, obviously, bookkeeper, and being able to write those checks to the charities of your choice. It gives you goodwill in the community. It also is a subliminal way of marketing your for-profit business, your real estate business, your development business, because the name's going to be on it. Well, this is how we support our nonprofit. This is how we support our foundation, whichever way you decide to go. So it really is a marketing tool. It's a philanthropic tool. It's a tax reduction tool. So it's worth looking at. And I think that that's the most important thing today. How do we maximize what we're bringing in through our businesses so we get to keep as much of it as possible? That's why we want to look at going nonprofit. So what is a nonprofit? Well, these are the pros. Tax exempt, we pay no taxes. And if you own property, no property taxes, you're exempt. Mission driven, you need a mission statement for your nonprofit, just like you have for your for-profit business, whatever umbrella you invest under. You also need a board of directors for your nonprofit. I did not form a charitable nonprofit, which means I could go out and get grants for everything that I need. Mine was a private operating foundation because it eliminated having to go out and find board members. You can have one director, and that director is the only sole board member, the president, the CEO, and the founder. You carry all the titles in a private operating foundation. You have a mission. My mission is to empower, educate, and enlighten. And that it's very simple. It's appealing to the clients that come to me through the nonprofit. They're typically, like I said, low-hanging fruit. They could not pay a regular rate, or they'd be under the corporate revenue structure. These are nonprofits that need their boards trained, or asking for me to do some work for them, like 10% of the regular price. And so because I have a mission to do that, and I want to keep my tax exempt approval with the IRS, on my tax return, which is my 990 PF, private operating foundation, private foundation, I have to write a paragraph indicating what I've done in the community and who I've given to, what I've supported. And of course, I have receipts. I have tax EIN receipts from those organizations. So everything's covered by paperwork. But I did not want to deal with a board of directors because typically I have not worked with partners. You likely have partners in the businesses that you manage, everything that you do. So it would be okay to have a charitable foundation and a full board of directors, as long as they are supporting your mission, the reason for formation, the idea that, you have to do certain things to keep your 501c3 status as a nonprofit. So you could well end up with a board. What does the IRS look at? At least 3 board members. What's better? 5, 7, or 9. Always an odd number, never an even number, or you won't be able to get a majority vote with an even number if it's a split 50-50 down the middle. A nonprofit is the beneficiary of the profits from your for-profit real estate business. This means when you are in the green, making a lot of money, and you start to look at, oh my goodness, what's still left in the accounts, what am I going to owe revenue taxes on April 15th, depending on when you file. If you file as a C Corp, an S Corp, or some other entity, eventually you do have to do a tax return and you will have an annual deadline. So you always want to keep an eye on what's on the profit side, because that's where I'm going to pay taxes. So let's look at an example of some real estate nonprofits. And it was really interesting to go out and do the research and to find that, yes, they exist. Yes, they have a lot of money and they're very successful and they're doing good things in the community. So there is the Real Estate Charitable Foundation in the state of Maryland. They are a 501c3, so they're charitable. They're not private operating. They have a full board. Their net assets on their most recent Form 990, which is the tax return that they file as a major foundation, their net assets were a little over $2 million, as you can see. This is their mission: to accept, maintain, own, lease, finance, and dispose of gifts of real estate and other tangible properties in support of the Community Foundation of Howard County. So this means that they have a partnership with the Community Foundation, which is a 501c3 charitable foundation formed to fund in that community, Howard County, Maryland. And all the real estate deals, people who, wealthy people who give real estate, just deed it, planned giving in their estates or trusts. All of that goes into the Charitable Foundation of Maryland. They dispose of that real estate and they put the money into the Community Foundation. So a very different philanthropic relationship between real estate transactions and a large community foundation. Fact, although about half of the nation's wealth is tied up in real estate, only about 2% of charitable donations are real estate donations. So look at how low that is. There's opportunity there. There's opportunity to dream, to have a vision, to have a plan, to write a strategic plan, to have a business plan, and to go out there and do this and raise that number nationwide from 2%. Sharing Center Properties. They are in, I'm going to just move this a little bit, Longwood, Florida. They are different. They have a different setup, a 501c2 nonprofit organization. Their net assets were less than the example for Maryland, literally $842,884. Their mission: holding title to real property, collecting income therefrom, and turning over the entire amount minus expenses. So they covered all of their expenses before they made a philanthropic donation to the parent organization, the Christian Sharing Center, Inc., which is an organization exempt from tax as described under IRS 501A. Their programs: holding title to real property, maintaining and operating that real property for the parent organization. Very different for a developer to go in and do that. Pera Northmark 2, Inc., Chicago, Illinois. Net assets on their most recent Form 990, which is their income tax return, almost $27 million. They are a 501c25 nonprofit organization formed for the exclusive purpose of acquiring real property, holding title to, and collecting income from such property, and remitting the entire amount of the income from such property, less expenses, to the shareholders of the corporation. The sole shareholder is the Public Employees Retirement Association of Colorado, which I thought that was very different, that they were in Chicago doing all of this development, but that they were giving all the money minus expenses to a public retirement association in Colorado, also a tax-exempt pension fund. Talk about a slick and savvy deal. That, to me, was the best of the examples. So what are the IRS or Internal Revenue Service requirements? Well, these are the codes that are most common and were most commonly used by the examples that I gave you. This is under section 501c3, which is the tax exempt section. These are the subsections. So 501c has 29 sections that list specific conditions particular organizations must meet in order to be considered tax exempt under the section. Your relevant codes as real estate nonprofits would likely be a 501c2, a title holding corporation for exempt organizations, or a 501c3, charitable, nonprofit, religious, and educational organizations, or possibly a 501c25, a title holding corporation for other qualified exempt, tax exempt organizations. There is a link here that you are be able to click on. By the way, there are resource file handouts today, as well as a copy of the PowerPoint that you'll be receiving from Peggy if you don't have it already. This is a clickable link on Ballotpedia. Excuse me. Other organizations that meet the requirements of the IRS Code Section 501A are exempt from federal income taxation. In addition, charitable contributions made to some Section 501A organizations by individuals and corporations are deductible under Code Section 170. That means that whatever you put into this development, whatever you pay out and decide that you're going to do under the mission of your real estate nonprofit, that is all tax deductible. Another link to click on at the bottom, nonprofit issues. Getting started. Getting your nonprofit real estate organization set up. First, educate yourself about the various parameters involved in starting a real estate nonprofit. Look at interest rates because they're going up now. We know that. And that's going to hurt the amount of investment or return that you get back. Look at market trends. We're still in what we're calling extremely overpriced, high-valued housing, commercial developments, multifamily units where they're being rented out at $600 to $800 more a month than they were prior to COVID. So we know there's a lot of money out there coming into developers, property managers, all of that. Look at the tax payments. What are you paying now on your for-profit business that could be diverted to nonprofits and a write-off for you as a major contribution that now goes into a tax-exempt organization? Look to see if there are any hidden charges in your real estate transactions that could be eliminated once you turn to nonprofit. Also look at any legal agreements that you may have with parent organizations, your own corporations that you run your investments under, your businesses. Do you need to have a written agreement in place to move money from your for-profit to your nonprofit? Yes, you do. Absolutely. And you can never move money back from the nonprofit into the for-profit unless you are not drawing payroll from the nonprofit, but from your corporation instead, but you're doing work for the nonprofit during your normal workday to maintain the operation of it. Now the nonprofit can cut a subcontractor agreement with your LLC to reimburse the LLC for the time that you took away from it to manage the nonprofit. That's what I do at the end of the calendar year, December. I move a chunk of money from the foundation into my corporation. I write up the agreement that it is reimbursing the corporation for all the work that I did for the foundation on corporate hours, and then moving that money quickly from the corporation if it puts it too high over in the profit bracket, moving a certain amount back to the foundation as a donation. So one of these movements is going to happen in May so that they're not right up on top of each other. And the other movement will happen in December on the 1st, not the last few days of the month, which is a red flag for audits. frame your new nonprofit's goals and objectives. You actually have to have a plan. You have to write something up. It can't just be in your mind and you're going to say, okay, we're going to do this. So every nonprofit organization functions on the foundation of a vision. A vision is where you want this nonprofit to be down the road, not today, but down the road, after you've had some time to handle it, manage it, and to see how it can reduce your taxation as well as increase your wealth holdings. So you need to lay down specific goals to achieve and frame certain objectives. As a real estate nonprofit, it's important to have your goals and objectives not only written, but accurate statements, since every plan you undertake, everything you do, every investment you make under this nonprofit is going to revolve around them. So let's just say you set this up, you kind of get the touch and feel of how it's going to manage the first couple of years. So your vision statements can actually kick in year 2 or year 3, unless you have access to enough capital now to start these investments right away. You could provide affordable housing units to low-income families. Okay. You could provide employment opportunities to residents, including connections to social services, so that the people living in your owned housing development or financed housing development get some training and get some jobs, so that they are actually able to move up and come and talk to you about buying a house, having a single family residence, not living in low income family units where the rent might be based on a sliding scale depending on where they fall on the at or below poverty level income for the size of their family. You also want to maintain proper, safe, and functional amenities. Obviously, unless you're in the middle of nowhere with no hookup, you're going to have a drainage system, water supply, waste management, of course. Set up an experienced team. When I talk about a team, it's the people you need to bring on board if you don't already have them on board in your for-profit business. Obviously, you need a home inspector when you're dealing with families that are going to fall under services for the nonprofit. Talking about existing residential that you take over and purchase, like maybe a 100-unit complex, apartment complex, and then flip it into sliding scale rents. You need somebody to inspect those, to get them together, because those people haven't learned how to take care of a whole lot if they haven't had a whole lot. You need a marketing strategist to get out there and sell this to community partners, to bring investors in, to get people to donate things to your nonprofit to help you out. A sales agent to close the deal, and a community manager to make sure that the community that you develop or purchase stays in stellar condition. So the roles are, for the home inspector, obvious: inspection, safety, hygiene in homes. The marketing specialist formulates a practical and strategic marketing plan for your nonprofit. The sales agent keeps track of all the new leads and the resident database as people start to move in. Your community manager maintains that positive relationship between the community and your nonprofit organization, which now owns something that it does not have to pay taxes on. It is just collecting the money and taking care of it, making sure everything is in place and up to par. So I want to talk a little bit about books that can help you. Nonprofit Kit for Dummies was written at the end of last year. It's now at Amazon and every other online bookstore, but it talks about starting up a nonprofit. And I am the primary author on that now, not the original author, but I did the update. You'll also be able to write grant applications for your nonprofit, and as well as apply for city and county community development block grant funds if you go the 501c3 charitable foundation route, because those dollars come down from the federal government in a downstream. For instance, I am in Arizona, so they come into Phoenix, Tucson, and Flagstaff, I believe. And maybe Yuma, I'll have to check the population, but millions and millions of dollars come in that are re-granted to charitable 501c3 organizations that provide services for people in need. It could be a homeless transitional center, building a public reduced rent housing complex someplace in the city, you can get grants to help pay for that. That makes it like the magic magnetic organization to bring these dollars in. Perfect phrases for fundraising. You can get individual contributors through special events to hand you checks for $1 million, $2 million to put into the nonprofit. It's not an investment. It's not something they're going to get dividends back on. They're giving it to you to reduce their tax burden, and now you're moving it into the nonprofit to reduce the tax burden that would have been on your corporation, because no one can just walk up and give you $2 million without being a partner on paper with the corporation. And then there's also perfect phrases for grant writing proposals. So you'll see my name on all of them. This is my LinkedIn profile, and this is my website. I want to take this time to answer questions because I had notified Peggy that I have a 3:00 call exactly, and I want everybody to get their questions in so that I can answer them the best that I can. So I'm going to stop the share because that was the last slide, and this is the time to ask your questions.
Well, I'll start because I have a question. Well, Arthur has a question. So go ahead, Arthur. You're muted.
Okay, so my question has to do with, you mentioned subcontracting the board member back to the initial corporation or organization, the for-profit.
Not the board member as much as the executive director.
Executive director.
Mhm.
All right, let me write
Because
that
you're
down.
working two jobs now. You're running your corporation and you're managing a nonprofit. You're only drawing your salary from your corporation so that the nonprofit builds up sustainability and year-end reserves and looks healthy on an IRS tax return for it. So you're not drawing a salary from that, which looks like in your heart, you really love doing this. But now it's time for the nonprofit to issue your year-end stipend, and that can be whatever you want it to be, as long as it's a contractual written agreement that the nonprofit foundation is reimbursing your corporation for all the hours that you spent in 2022, setting up, managing, getting everything in order for the nonprofit organization. So now that check goes back into your LLC or whatever corporate formation you have. And if you want to draw a bonus from that, if you want to take all of that, just know that it's going to be taxable because you drew it out as payroll or a stipend or a draw.
Oh, that was the other piece of the question, whether or not it was taxable.
Oh,
Thank you.
absolutely taxable. You have to watch the bottom line on what you're going to put back in there and draw out.
Thank you. Nika?
So, yeah, I have a question about because I know you presented real estate nonprofits, but I've been told not to really hold your real estate in a nonprofit because you will never get it out. And if your primary business is that you own properties, then, if it was in a charitable LLC and you're not taking anything, where are you getting your income from?
What about your low-hanging fruit property that you normally wouldn't buy, but it's a good project management because the rent is steady. It's just not in the best neighborhood. It's a small investment. You're making good money on it, probably paid off cash when you bought it. That's what would go into the nonprofit, not your $5 million homes.
Okay. Yeah, because the way someone had described to me is like, you keep all of your property in a real LLC and then you use the nonprofit to kind of get the grants and to then, maybe you could use that, you could get grants and somehow.
You use grant money that comes into the nonprofit in your for-profit.
What? I'm sorry, say that again.
You can't use any grants that come into the nonprofit for any operations of your for-profit.
Yeah. Okay.
So thank you, Nika. So I have a question. You brought up you're paying yourself at the end of the year, payroll. You're pulling some money out of the foundation to do that, but you might have pulled too much. Now you're putting money back in and you're donating it again.
Mm-hmm.
So it's a write-off.
Mm-hmm.
Even though you already donated it once.
Oh, I donated 10 times last year from my corporation into my foundation.
And then you pulled money back out. And
At
then
the
you
end of the
donated
year?
it again. So did you get to count that twice?
No,
Huh? Yeah.
no. The foundation wrote a contract, moved money up there, and that was what went into the year-end reserves to carry over into 2022 for the LLC to have money to pay the bills and my payroll. So I actually emptied the LLC into the foundation. My intent was to not pay $55,000 on April 15th like past years.
Well, we'll have to meet. We'll introduce you to Gary Burns. He'll get that money back for you. Like that. Does anyone else have any other questions? Yes, Arthur, you're back. Good.
So my follow-up question, just to make sure I'm understanding correctly, you set up a nonprofit. First, you pay from your LLC or your for-profit organization into this nonprofit, and then that takes its money and gives it to charitable organizations? Or is it that it itself is making the investments?
You can make investments under your foundation. If you're a 501c3 charitable foundation, you don't have to donate money to any other nonprofit. You don't have to have that 5% rule. But because I'm a private operating foundation, which means as the owner, I have to put in a minimum of 51% of the revenues that go into my foundation have to come from either the LLC or me personally. So how I meet that 51% without draining the LLC, I have monies that come from all my books and all my online teaching courses and grants. I have royalties on that come in every month, literally. And because it's a significant amount of money, it can't come to me personally and it can't go to the LLC. It would kill me on tax day. All of that goes into the foundation. The foundation actually has more money coming into it than the LLC. And the money is there and put there to keep it from being taxed.
So when you start something up and you put money in the foundation on a private, so this is for the private, you have your own company, your S Corp or LLC or whatever, and then you've put money in it. Now that's not doing anything yet. It's not earmarked for anything. Can you now take that money and invest it in an investment so it makes money so that the foundation?
A foundation cannot invest, not a private operating foundation. Now, the large foundations that are charitable, like Kellogg, Robert Wood Johnson, AT&T Foundation, of course, they have endowments. They have their money invested. They're making interest, drawing it off and not touching the endowment. But the way I set mine up, because I don't want a board. I don't want to play Mother May I every time I want to make a move or take $1 or create a class. I don't want to have a board vote on whether or not we can do it. So I wanted to be the only director in charge of the private operating foundation. And it's been around since 2008. My name has been the only one on it. But I finally, because I had my trust set up this year, and I finally put her on it as a trustee and wrote up the legal paperwork and put her on everything at the bank because of my age and because of everything that I've accumulated. I need to make sure that this doesn't go into probate if something happens to me.
So the only thing that because before you were saying you could hold real estate in, but that's not in the private.
Not in the private, no.
That's only in the charitable.
Only in the charitable.
And then the charitable has to give 5%, but every year the charitable has to give 5%.
No, only the private operating foundation. I've already started writing checks to nonprofit organizations early this year instead of waiting for the December pileup.
But the charitable doesn't have to give any of the money
No, people have to give you money.
It has to give the operator money.
You're going to have donations, contributors, because you'll have a full board. And their job is to have something called a give or get policy. And that means when you appoint the people to be on your board, minimum 3, you have to have at least a president, president, secretary, and treasurer. You don't have to have a vice president unless you want a full corporate suite. But minimum 3 board members to get your 501c3 status with the Internal Revenue for charitable foundation. So with that, if you've got a small group and you trust your board members, you should be able to operate pretty continuously. but you just want to make sure that you're following all of the charitable rules, and you don't have to give money away. You now are eligible to apply for grants as a charitable organization. So if the U.S. Department of Housing and Urban Development comes out with a grant for the development of multifamily housing in specific census tracts where you want to have some investments and turn over some money gradually, you can apply for that grant, and that grant can build out everything, literally, and pay for everything. You're only liable for Davis-Bacon regulations.
Arthur, I saw that hand go up. Yes, Shanika?
Hi, thank you for your presentation, Dr. Browning. It was very, very
welcome.
informative. So I have a question. I know a lot of the largest charitable organizations in the world belong to corporations, and they often use them as like their research arm to test different products and business models.
And they also use them to push off profits so they don't pay taxes.
Yeah, so I see that, like some that I've read about, I won't say their names, but they've used it to test the product. And then if the product does well with their surveys and their focus groups on in the research side of the nonprofit, then they make it a product on their corporate side. But is it good in the real estate to make your foundation or nonprofit closely related to what you would be doing, I guess, on the charitable side of your business?
Yes, if you specialize in multifamily housing, then that's the best place to go because there's grants out there for that. But if you specialize in high-end, multi-million-dollar homes, that's not likely to be approved by the IRS trying to move something like that under a 501c3. It would make no sense because people who need a house who would fit the low-income category, if you received a grant, they would never be out there shopping for $1 million home.
Right. Okay. So I just want to make sure it wasn't a conflict of interest if it's closely related to what you do.
Not at all. It makes sense not to reinvent the wheel,
Right.
but to just have a lower tier wheel.
Okay. Thank you so much.
Thank you. Yeah, Nika, and then Cliff, and then Arthur.
Okay, yeah. I was just wondering what is the other benefit as, having both besides having a place to put your money as a charitable donation and then getting money that you earn to run it. But what other benefits are there? Because in that case, it's like, okay, you're getting paid for another job in a way. You still have to do those hours.
So in my
and then
case,
the other is like you could just donate to another charity and have the same tax. What other benefits?
the number one benefit for me and for anybody is your tax situation. Only you know what that looks like on April 15th or 16th or whatever day we file. If you like paying taxes on April 15th, then there's no reason to have a real estate nonprofit. But if you are connected to the community and you're trying to create an image of goodwill and not just take it in, then you would have a 501c3 charitable foundation and you would get the word out because that's going to bring buyers in at all levels. Your high-end buyers who are looking at what you're doing in the area of philanthropy, you now look like a money mover and shaker to them. It's going to bring in middle income looking for a chance to get their first house, wondering, do they go to the corporation or can you help them under the foundation? And then people who now are classified as the bottom tier of the economic structure, they're looking to get out of rental ghetto type barrio situations. And if your nonprofit happens to have built a new complex and people are in there on a sliding scale and you're getting Section 8 authorization on them from HUD before they come in, you're getting paid by the government for them to live in a $2,000 or $3,000 a month apartment, literally. So there's a lot of advantages and strategies, which why you need a board if it's going to go charitable. You need people on the board who understand all levels of investment, benefits, and how to get the right people into the right kinds of housing that qualify you to get paid by the government for them to live there.
Well, then you would just have a salary for that because you'd be,
Yeah.
that's a lot of work if you're
You'd have
working.
a salary out of the grant. You'd have a salary out of your own company. There's a lot of work going on.
Yeah. I mean, that's a lot of work if you're doing
You're the
it.
developer. Yes.
Yeah.
You're the manager.
That's what I mean. Yeah. That's a lot of work to do it all underneath the charitable organization. Yeah. Okay. Thank you.
Mhm.
Cliff?
How much of the
Arthur,
dollar from the
David?
well, actually, I have a couple of questions. So how much of the dollar on the nonprofit reduces your tax burden when you file your taxes? Is it 100% of that dollar, or is it a percent of
Well,
that dollar?
the nonprofit doesn't even get filed with your regular tax return. It does its
Okay.
own tax return. It's called a 990 form. And every dollar that came in is non-taxable.
Oh. Okay. So that's a lot different than deductions on your own business.
Oh, yeah. It's
Yeah.
not hurting the LLC at all. It doesn't show
No.
up on your personal tax return or anything. It's its own separate entity with its own separate EIN.
So you're reducing your taxable income by making the donations then to the nonprofit. And
I'm not rich, but I'm reducing my taxable income by $200,000 a year.
that's amazing. Okay. All right. I'm going to ask one other question, then I'll yield the floor. My second question is on grant writing. So I've always been told that it's beneficial to hire someone to write grants, but I see that you have a book that you put out that guides people in the process of writing grants. So why are grants so challenging to write? And why has it been recommended in the past to hire a grant writer when you want to apply for a grant?
Because if you're running a 501, if you're running a 501c3 charitable organization, which is typically who gets grants, we only had business grants during the COVID rescue money. You won't see that kind of plethora of grants coming out for businesses ever again unless we go into a depression and they have to give us money to bail out our own small businesses. But with that, you will see, if you're going to be hiring a grant writer, you need to know what the process is, what award-winning grant application should look like. I just got a call this morning from some distraught lady in Florida who hired a grant writer 2 years ago, paid her $2,000 to find federal grant funding. Okay, then COVID hit, and the woman said she was sick, a family member died, she couldn't do it, she kept the money. And so then this morning, the nonprofit director called and said, I called her and I said, I have a federal grant. It's due tonight, okay, which is the most worst scenario ever. It takes about 60 to 100 hours to write a federal grant application, okay? And she said, Bev, can you handle this today? And I couldn't help but laugh first. She was crying and I just like, oh, today? I said, you're talking 50, 60 pages of research and writing in order to get your application into the United States Department of Education. And I said, have you started on anything yourself? And she said, no. And I said, well, what about your grant writer? She said she's not available. I said, and what about the money you paid the grant writer? Because she thought $2,000 was a lot. Okay, federal grant applications for the grant writer cost anywhere from $17,500 to up to $30,000 for one application, one federal application. So she paid $2,000 and thought she was going to get like 5 federal grant applications written. She was ripped off and she was crying because she lost the $2,000 because she wanted somebody to write the grant application today. It was 30 pages, single space, plus attachments, and she didn't have any data or information on the impact of the services that she was providing in order to prove that she could provide new services under Department of Education grant funding. So she totally was lost. She didn't know how to write a grant, what went into a grant. If you're going to pay money out to a grant professional writer, you at least need to know the process, what things should look like, what the document should contain in it when it comes back. You should have a timeline, a work plan. When are they going to do this? When are you going to see the first 2 or 3 drafts and make changes and meet with them? There's so much communication. You have to sit at the table and help as much as they're there typing the information that you give them. We can't make this stuff up.
Okay, so I'm going to interrupt because we have 4 other people that have questions, and grant writing was not part of the questions today. So,
Thank you,
so
Peggy.
Arthur, can you be really fast? And then David, Tina, and Kathy.
Sorry. So, my question quickly, which really was 2-part, but basically talking with investors. So we're always thinking, how do we make money with this? In my mind, I'm concentrating on, okay, you can put the money into the organization. This nonprofit has money coming in. It's making money. Is there any kind of way other than a paycheck to get that money back out and benefit from it? Or is it just simply tax write-off?
You could draw a bonus, but you still have to pay taxes on it.
Okay. And then secondly, underneath that, we also, for example, I have some life insurance policies, different types of things like that that are processed through my business. Is that possible?
Move them to the nonprofit. I've moved all my life insurance policies to the nonprofit.
And that can be paid through that, and they can, oh, okay.
I even created a wellness plan under the nonprofit so that when I go for my chiropractic treatment, my spa days, whatever I'm going for, it's part of my wellness plan, and the nonprofit pays for that because I'm not drawing a salary. So that's my benefit.
Great. David Andretti.
Yes.
Roger.
Hi, Beverly. Thanks you for your time. Can you hear me okay?
Yes.
Very good. Yeah, just real quick, Beverly, just trying to understand more of this process. So let's just say you have a grant from the government, HUD, because I'm familiar with Section 8. I do that. So let's just say you have that. How many LLC or companies should you set up in this same form? And then the person who's running it, do they get paid, or can they get some sort of a write-off as they're working for the charity?
They can donate their time to the charity to do that, but there's no bill, there's no paper transaction, there's no need to have the value of it because it's under the guise of the foundation. But if they give you volunteer work under your corporation, then you should have some documentation that this was given, because it's considered an in-kind donation. And you want to keep track of that time and those hours. In the event you need to calculate it as a write-off, like a volunteer who did it, a professional job.
So can your LLC, your other company, be billed for that, or they're paid by that, and then somehow get the charity write-off on the other way?
No, you can't get the deduction on donated time or services.
Okay. All right, thank you.
Tina?
You're on mute, Tina. No,
Yeah.
It's your microphone, Tina.
We'll put it in the chat and we'll read it. Kathy?
You came through, Tina. We could hear you now.
Just to see if the application works, let's just say I had an ALF. Can you hear me now?
Yes.
Okay, so what if I had an ALF? Could the 501c3 purchase the property for the facility?
absolutely. And you wouldn't be paying it in property taxes if the 501c3 is on the title.
Okay, all right, okay, good. All right, thank you very much.
You're welcome.
Yeah, so I was wondering if there's a way to combine the whole life insurance with this to actually avoid taxes even more. If the charity could be owner and beneficiary of policies on all the board members, and then you could take a loan from that life insurance policy, which is tax-free, to make your investments with.
It sounds legitimate, but talk to a tax accountant.
Okay. Thank
So
you.
I got 2 whole life policies written, and they're written payable to my trust, but they're under the umbrella of the foundation. And if anything, the foundation pays the monthly premiums. And when something happens to me, That money comes in and goes into the trust, and my daughter is the primary trustee for the trust. And if I take a loan on it, then obviously that's going to reduce the amount of the payout if something happens. But the loan is going to be under the guise of the foundation and not taxable income.
Hmm.
Thank you.
Thank you very much.
You're
Thank you
welcome.
very much, Dr. Bev, for being here and explaining all of this. And I'm sure people will think about it and have a few other questions. Carlos, thank you for the, Fernando, thank you.
Thank you, everybody. And I want to say I'm not anti-tax. I pay my share. And I've always paid my share. But as I get older, I want to hold on to more of the money. So this was a strategy that I created out of desperation in 2008.
Thank you, Dr. Bev. And we will see you all same time, same station next week. Thank you very much.
Thanks, everybody. Be blessed.